thank you everyone for joining. Thank you, Sophie, for joining us. Sophie is a managing partner at Oyster Ventures, an early stage venture focused on FinTech and other high-tech startup. They've recently raised their third fund. Congratulations on that. And thank you for joining the chat.
Thank you. Just a little correction we are raising, haven't closed yet. Yeah.
Okay, well, congratulations on the second fund then.
Thanks.
And then, so before we start, we'd like to talk a little bit more about you and your experience, Sophie. So you were born and raised in China, started your career in journalism before moving to the States and funding your own company. And after 6 months of that, the company got acquired, which was very amazing. Can you talk a little bit more about that experience?
Yes. So to unpack a little bit, the way I grew up is a little bit of mix of Western and Eastern cultural. So I was born and raised the majority in China prior to turning age 14. And after that, I was homestayed with a Jewish family for 15 years. So that's my background. And I got really lucky that after I started my software startup, that was before VR hype. But as an entrepreneur, you actually always know that how fast your company will grow. So in my head, I knew the hardware adoption for VR is not there. So I was strategically showing and demoing my software to some corporate venture arms. Back then, I showed to a lot of large media vendors. One of the public traded company, you need to create some buzzword and stories for the stock price. So I exited to them within 6 months and then paid back my investors' money, took care of my co-founders. So that was the story, yeah.
So a lot of successful entrepreneurs move into venture capital because of their experience. They feel that they could understand and invest in the correct way. What was your experience moving into the VC world, and what are some of the challenges and lessons learned from that experience?
Oh, it's a big question. You mean how do I got into the VC world, or?
Yeah, the first question would be, how did you move into the VC world?
So the path to VC is rather mysterious still to a lot of people. Now we know the path to hedge fund, private equity. You go the Asian leaner path. You go to Ivy League school, consultant, banking, and private equity, hedge fund, yada, yada, yada. So venture investing is a myth. And then I think there's a couple of major ways to get into it, right? Either you start a company, sold it, become venture partner for a large fund that used to back your company, and later roll into associate partner, general partners role. So that's one. Second is you carry a household name like Draper, and you start DFJ, Boost VC, and Draper Associates. That's another way. And then, or you exit a small amount, and then you collectively partner with other, like-minded entrepreneurs and people who from the banking world and start a fund. So my path a little bit different. Is I exited small startup, and then I accidentally landed a opportunity within a new frontier venture firm that is very edgy, and they are aggressive in terms of investing in an early stage, and that fits into my personality pretty well. And I was shopping around opportunities. They, after the merger acquisition of my startup, and then they asked me to go to the studio, say, can you be our VR technical consultant? I told them I'm not technical, nor had I ever been a consultant, but I know finance, and I love entrepreneurship. They said, well, your personality fits very well into being a venture capitalist in Silicon Valley, focused on early stage. That's how I started a career.
And how was your first experience? Did you like it? And then you started down your own fund afterwards, right?
I loved it. I mean, a lot of people, I think there's a distinguish we should make is being a good investor doesn't necessarily mean you are a good fund manager. Now, if you enjoy investing, chances are you might not enjoy being the founder of the fund. Now, here's the story. So a lot of entrepreneurs, same thing as if you are an engineer, you start a company, and later you have to grow into a CEO, COO, CIO, CTO's role. The higher you go, the more is about managing people, expectations, lay out the ground, lay the strategy for people, and fundraising, not necessarily crafting your investment or building skills. So now your question is, do I enjoy my journey of starting my own fund? I do, because I started my fund with nothing, emptied my own bank account, and then I'm my largest LP for my fund one for the longest time. And for me, it's quite an entrepreneurial journey. And I firmly believe entrepreneurship is the fastest way to make a human grow, because the amount of responsibility and pressure will turn into, if you do handle it well, that's the biggest fuel you could have motivation wise. So I am running my fund like a startup. I do fundraising, deal sourcing, due diligence, exiting strategy, back office, hiring, scaling, all in one for the first 2 years. Now I have a partner of 3, and 2 associates and 1 executive assistant, but still this is very much a Series A or maximum Series B type of startup in terms of where I am at with my own fund. So it's a fun journey. Yeah.
So you were able to use some of your skill sets as an entrepreneur to run your fund much like a startup. I think a lot of funds start off. The first fund is, they say it's always the hardest, but they also say that the second fund is also very difficult because the investment periods the life cycle are so long that it's very hard to show your first LPs what are you capable of doing with their money. But you did that in 2 years. How was that journey?
It's any fund is always the difficult one. So, but all you need to do is get things started. My journey with my fund is, I think investment is a little bit different. I guess similar, but also different than, launching a startup. Although I'm running my fund like a startup, right? Because what is investment? Investment is finding the information arbitrage. So the information arbitrage you find, it's not only solely rely on how hardworking you are, but also the timing of the market, but also the circle of the right social network you're in, but also the exiting strategy you build with other corporate venture arms. So it's a lot of a relationship, resources, strategy play. I enjoy, because normal days, what makes me really happy is having carve out a time and sit and just think. Being an investor is a really interesting profession in the world. Is you literally get paid to think. So I love this about being a venture capitalist. A second is running your own fund. Fund 1, fund 2, doesn't matter, fund X plus 1. You need to be having equal amount of ambition, like in a tech entrepreneur, and you to be incredibly creative and resourceful. And then obviously that the amount of risk tolerance you need to have obtained, it should be higher than any investor and any entrepreneur in the world, because you're doing early stage. Everything you raise, everything you deploy could be turning into zero, and you have to be okay with it. So my head is constantly wrestling with, if you're not taking too much risk, if you don't have startups that, if you don't have much write-offs, that means you're not taking much risks. So all in that, I feel, being in a VC or finding any job, you have to find what is the key characteristic that job needs, and do you have those personality traits to fit into their role. For me, I'm ambitious. I can be quite creative, and my risk tolerance is high, and I'm pretty resilient. If the worst people can give to you an answer is a maybe. I love taking yes as an answer, and I love taking their no, because can always help me upskill. So I hope this answer your question.
Yeah, so you've mentioned a lot. So your function is a lot about thinking about, whether or not you want to take a certain bet into a team, into a certain vertical. What are some of the advice you would give to entrepreneurs, especially young entrepreneurs, that are starting their own venture? And what are some of the advice you can give them, and what do you look for in a team and their idea?
You mean young entrepreneurs wants to become a VC, start their own fund, or they're just
young
doing
entrepreneurs who started and then they're raising their fund. So we'd love to have your perspective on the investment side. So how an investor would look at their ideas and look at their team. Basically, what do you look before you make a certain investment?
I think different investors will give you different answer, because it's incredibly hard to quantify and data labeling the successful characteristic of an entrepreneur from angel to seed before showing any tractions, right? There's no zero-sum answer, but I can tell you what majority of my VC friends and what I'm looking for is, one, product market fit. Are you in the right macro market? Do you fit into the macro trend? Do you have vertically integrated knowledge to tackle this issue within the industry? Two is team dynamic. Is everybody tackling this issue with the right reason? How many years have you been known your co-founders or executive teams? Do you guys have a working or complementary working chemistry? If things hit the fan, can you see things through? What's your risk tolerance profile look like? And then third is past experiences that you can build a nice narrative. Okay, this is, have you been within an industry for a certain amount of years? What are the roles you take within organizations? Have you always only worked for startups, or have you worked for Fortune 500 and know how to build and scale a company, how the large organization functions? So it's all that little tangible or intangible things that we're looking for. And then for us, Oyster Ventures, we do a lot of FinTech investment. Within FinTech investment, there's so many, like private market investment, public market, tool sets, no code, KYC, AML, right? So a lot of the innovations are coming from, either we acquired there's a new user in the world, so we have to analyze if users will adapt to those tools, or there's no new legal innovations will breed another whole wave of FinTech innovations. So this is what we're looking for in terms of startup.
So you've mentioned about FinTech, and obviously given Oyster's success in a lot of prominent startups, some of them already have had their exit. Can you elaborate a bit more on the macro trends that you've seen in the FinTech world? Obviously, it's a highly regulated market, but where do you think it's all moving? We've seen some trends, obviously, in private equity, making private equity sort of accessible to the public market, or VC to the public market. Do you think that trend will continue? What are some of the other trends do you think will happen over the next few years?
I don't think in FinTech, I will tell you a little bit of background story why we love FinTech, because those goes back to the previous question you asked. Why do we have success to continuously raising fund every 2 years? And when people say the first 3 funds are the hardest to raise, this is a strategic, as a fund manager and the founder of a fund, this is a strategic play, meaning that I know anything that if you work closely with money, you will know where where people consuming behaviors, where the market trend goes. So because it's if people vote with their currency, with money, so you know the micro and macro trend depend on where the money flow from consumer and enterprise side. That's one. Second is I know investing in FinTech. FinTech startups are notoriously known to have hyper growth within short amount of time. For me, I have to strategically produce good IRR and cash return if I want to turn Oyster Venture into a household name and successfully raising subsequent funds later on. So that's the second. Third, you ask that, what is the trend? And then I'll tell you that what we looking for within Oyster Venture, since we're majority focused on FinTech, is one, we're focused on the forgotten and the next generation, meaning seniors and Gen Z, as well as their kids. So why is that? It's because us and as millennial and our previous generation, we have been served by the entrepreneurs in our generations pretty well. So it turned into a red ocean. But the blue ocean opportunity is still in the forgotten senior and the next generation. So that's what I'm looking for. Any tool sets or better online banking UX UI experiences serving for those two groups, we're looking for it. And that has been serving us really well. The second is new true deep tech innovation, their marriage with banking and financial system. In our generation, the new true innovation, the groundbreaking innovation is blockchain. My theory is if you can build anything on blockchain or associated with blockchain within financial service, why wouldn't you? It provides tremendous amount of liquidity and efficiency and transparency. That's what banking is. That's what private or public market investment should be. So that's two. A third one is what we're looking for is in the current banking infrastructure, any tool sets, any startup ideas, any exchange that could provide liquidity and efficiency to the current market, then we will take a much deeper look into it. So those are the three, you could say a macro trend or, that I see in FinTech industries. So, but it happens to be our investment thesis as well.
Interesting. I think when you look at the entire financial market, obviously different countries have different strategies, and that's sometimes given their current situation. For example, China, who leapfrogged sort of the credit card system and directly went into mobile payments. Is Oyster looking at any investments in FinTech within the Chinese market, and how do you view that market?
Chinese market is even a bigger myth. It's very mysterious. I speak Chinese, but I cannot read into the policymaking's mind. And so is everyone else in China. So do we look into it? Yes. But do we look into it to invest? No. We look into it to learn from the best. Why? Because China, we have such a large population living in a very condensed certain areas. That means there's a lot of transactions. People love to consume. And the digital, like you said, we leapfrog the credit card, but jump right into a digital wallet world that powered by WeChat and Alipay. So there's a lot of online innovations from this consuming behavior. So the founder of SoftBank, Satoshi, had a famous investment theory, time machine investment theory is whatever is functional and took off in Silicon Valley, 5 years later, let's invest, find a similar company in Japan, and then China, and then Southeast Asia and Latin America. And now, for me, I have another reversed time investment theory, especially in the FinTech world, is whatever you find the FinTech innovation within the digital transaction world that's from China, Southeast Asia, let's see if North America can adapt to it.
because of some of their growth, you think that some of these regions actually don't really have the technical baggage and technical debt to move into a more innovative solution?
Yep.
Understood. So you've mentioned some of the other countries, regions, Southeast Asia, South America, and Africa as well. I think you're starting to see a bustling fintech world that's happening out there. Do you think those are markets that have more predictability and that would be interesting for Oyster Ventures?
There's less predictability, but there's alpha to be made. Those two are directly coordinated. But yeah, that's what we have, a partner based in Hong Kong, and he's a nerd out in fintech world through and through. So
interesting. So I guess in the end, we've touched on some of the key aspects. What are some of the value do you think an early stage VC firm can provide to fintech companies that can help them grow into the next phase?
That almost it's a two-sided marketplace, right? Thinking about money is currency, is commodity. Me as a VC fund, I am nothing but a saleswoman. Why? Is I'm selling this money as it's a bundle of energy I raised from my LPs. Then I have to storytelling, package this energy and sell it to entrepreneurs to take my money. So they can get capital and then they get resources behind the capital, as well as knowledge, resource including knowledge, your partnership with other CVCs, and your knowledge within different market sectors. So as an early stage venture fund, what is the value that I could provide other than capital to entrepreneurs? It really depends who I am, in general speaking, what's my background, where are my social resources and capital resources coming from, what's my LP's background, and what is the entrepreneurs building. For example, with an Oyster Venture, my whole premises is I want to build a cross-border international funders fund, meaning I raise money from international well-known entrepreneurs. And then I take entrepreneur that I found locally here on their international expansion journey. I give them legal advice, market expansion advice, strategic financing for next round advice. So those are in general 3 areas that I can provide to entrepreneur, because how I purposely fundraising from strategic LPs with different resources and how I see this world is going. Globalization is inevitable. So yeah, hope this answers your question.
Yeah, for sure. I think you've mentioned a lot of good points, being resourcefulness. I agree the fact that some of the VC firms now, especially smaller VC firms, it's a very competitive market. So I think smaller VC firms can actually bring a lot more value and being a lot more hands-on was the entrepreneurs. Do you have any last advice to Cornell or entrepreneurs to move into fintech? How what should they do to raise their first fund, or what are some of the what size of companies you guys are looking for? Do you guys invest in early stage startups?
We do. So our bread and butter is seed to Series A. And if we like your company continuously, you are in the right path to become unicorn, then we'll keep doubling down. And then not only doubling down with capital, we're also pull out all our resources and help you raise the next round from strategics. So our average check size 250K. If we lead the deal, it's anywhere from maybe average leading check size for early stage venture is about $1 million. And I think my advice for not only just fintech, but all the entrepreneurs who want to start this journey is it's incredibly hard, but you'll get a very good lesson from it and you have a lot of fun. So whatever you do, make sure you have a lot of fun. Work with good people. Ask yourself, are you in this for the right reason? Because you cannot time the market or exit, but you can only time with your own internal growth timeline. It's entrepreneurship the right journey for me as a person to grow. And it's the problem I'm solving, the product I'm building, the people I'm dealing with on a daily basis. Can I learn from them? So for me, is fundraising is just as hard as anything in the world, if not even harder, because I have a relatively younger face, and then but it's a necessary evil to deal with, because once I get the money, I get to deploy into the brilliant entrepreneurs that know way better about the industry than myself. I learn from them and I help them. That's a very rewarding feeling, not only financially, but also for my personal growth as well. So.
Well, thank you so much, Sophie, for joining us, and we appreciate your time here and sharing some of your experience with the Cornell community. Thank you again.
Thank you.